before we get started, I wanted to let you know that I started a hedge fund. I raised assets and had my fair share of successes and failures with regards to raising assets. Prior to starting a hedge fund, I actually worked for a big bank, UBS. While I was there, I pretty much only experienced success with raising assets. And, I had my set of failures there, but generally I didn't experience the drawbacks of having a hedge fund and raising assets. So starting a fund myself has given me a unique perspective, and it's also given me a unique perspective being on the other side and actually handling pension fund assets. So I know what's possible, and I know that a lot of work has to be done. And tonight, I've invited people who I think are very, very important parts of this community to speak on raising assets. The one thing I know for certain is you can't, it's not only about just creating new leads. A lot of us just want new leads so we can get in front of them and talk about our strategy. That might have worked in 2005. I don't even think it was working then. I think maybe it might have worked in 1999. It doesn't work today. It doesn't work today. So the content of the meeting tonight is exactly what you requested, and we're going to give you great content about creating new leads, which is something that some of you wanted. And if you're serious about raising assets, this is the perfect event for you. We could spend 2 hours on each of these. There's 4 speakers, and we're going to allocate that time, 10 minutes for each presentation, and then a 5-minute Q&A behind each speaker. That'll give us enough time for roughly 2 questions. Our happy hour tonight was sponsored by the wonderful people from TT, Trading Technologies. I have to tell you my own experience. One day, this gentleman right here, he showed up in my office, and I let him into the trading room and felt really comfortable with him, and he was showing me around the system and offering a lot of very useful pointers on how to play around and move within Trading Technologies, their platform, which most of the institutional order flow on futures goes through. So he's a gentleman who not only works for a technology company, but he has his own trading background. He knows what risk capital is, and I just wanted to have him kick off and say a couple of words. Your turn. Thank you all.
Thank you very much, Mike. Tanya Coakley is my associate. We cover the southeast part of the United States for Trading Technologies. While we're a software vendor, our business is selling software. We realize that we leave a lot on the table by meeting a lot of great people at conferences, be them fund of funds, be them large institutional investors, be them people that don't trade futures. And it just didn't make sense, really, to have this just fall on the floor and not be able to do anything with it. So about 18 months ago or so, we developed, let's call it a cap intro network. What we try to do, basically, is get good people together with good people. Kind of Match.com for the cap intro space. We don't take a fee out of it. We really are not incentivized by anything other than karma. So if that sounds remotely interesting, please, let's exchange cards, see what we might be able to do. I can't make any promises, but some of the larger names out there, be them in Europe or the United States, are in our network. Some of them are very active investors in today's environment. Our intention with Mike is to hopefully in the future put on a more targeted dinner, intimate such as this, but get liquidity sources that are actively investing down to South Florida. We're very active around the trade shows, especially in the winter, the circuits. So if you if it comes to be MFA time or game time, and you have an interest in what we're up to, please shoot me an email, and we'll be happy to try to get you on board. Thanks.
When I was pulling my thoughts together for the meeting this evening, I thought about some of the conversation that I had with networks, contacts. In recalling those thoughts, I recalled the common thread of each conversation being the operational issues that stand out the most today. I thought back to my experience, and that was always the truth of what was being said, but not actually practiced. Last week, I was looking at Opalesque Roundtable, and I thought Rainford would be a great addition to our conversation this evening, and decided to pick up the phone and call him. For those of you that don't know Rainford, he's the co-founder of the Florida Institute of Finance. He's an academic. He runs a consulting and advisory firm, which was started in 2004 in the alternative area. He advises asset managers, asset allocators, and some service providers on manager selection and due diligence. On the asset management side, he helps emerging hedge funds to become more institutionalized by advising them on the development of the operational infrastructure and risk management systems. He represents a little over $1 billion in assets under management, and he's recently created the Family Office Institute. So with that, let's welcome Rainford.
Talking about the right guy. When Mike called and asked me to talk to you guys about the operational side of the hedge fund manager, we've been around to a couple of conferences lately, and one of the themes that have been constant throughout is the need for hedge funds now, post-2008, to develop a governance infrastructure. That means that this type of infrastructure needs to exist in order to mitigate operational risk, fraud risk, and execution risk. Now, what does that mean? It starts from the actual fund structure, your organizational structure, all the way through the usual third-party providers, your fund administrator, your auditor, and your prime broker. If you look out into the marketplace today, when an institutional investor, endowment, family office, who then coming in to look at you for allocation, they're going to be extremely stringent in terms of what they're looking for. So let's start with your basic fund operational infrastructure. You need to demonstrate within your fund these days that you have control processes in place, not just the days of the single manager in a garage running $1 billion, long gone. You need to show that you have a bench. The bench needs to have some depth. So if you are the single fund manager, that's not enough. You need to have an operational person, you need to have a CFO, you need to demonstrate that there's talent in the organization. Now, why is this operational risk component important? Well, operational risk leads to many of the other risks we talk about, in particular, market risk, and all the other risk components, whether non-directional or directional market risk. So from an operational perspective, not only is staffing important, but also the processes within the organization. We've spoken to a number of funds, one in particular, great systems for controlling risk. I said, well, who makes the trading decisions? I do. What happens if you get hit by a bus? Oh. Do you have key man insurance? No. Do you have a manual that dictates all of the control processes in your organization and where the weak points are? I said, well, what do you think an institution coming in these days will be looking for? How do you reconcile your cash balances? Can you walk me through a trade from A to Z and how that trade is reconciled at your fund administrator? What about your valuation policy? How do you value your securities, and how do you account for discrepancies between what the administrator has and what you have as a value for your NAV, and how is that reconciled from an audit perspective? All those details are very, very important.